Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair GBP USD. And first, we'll be talking about fundamental analysis before we move right down to technicals, which is purely what we'll be seeing on the chart. Now, we have seen that our GBP USD slides back closer to the 1.2400 amidst a reviving USD demand. A downside seems limited, of course, and GBP USD turns lower for the third straight day amidst the modest of USD uptick. Now, the cautious market mood is seen benefiting the safe haven greenback, and bet for an imminent Fed rate hike force might continue to cap the buck. Now, the GBP USD pair has struggled to capitalize on the previous day's goodish rebound of over 70 pips and attracts first sellers near the 1.2455 to 1.2460 region, or we say the 50-day simple moving average on Tuesday. Now, spot prices turn lower for the third straight day and trade just above the 1.2400 round figure mark during the first half of the European session. Now, the prevalent cautious mood around the equity market lends some support to the safe haven, the United States dollars, which in turn is seen as a key factor acting as a headwind for the GBP USD pair. With that said, any meaningful upside for the USD seems elusive, and rising bet for an eventual pause in the Federal Reserve's policy tightening cycle. In fact, the current market pricing points to a greater chance that the US Central Bank will leave interest rates unchanged next week. Now, it is worth recalling that a slew of influential Fed officials last week backed the case for skipping an interest rate hike at a June policy meeting. Adding to this, the disappointing release of the US ISM Services PMI on Monday, which fell to a 50.3 in May, signals more cooling in the US economy and offers lesser headroom for the US Central Bank to keep raising interest rates. Now, this leads to a further decline in the US Treasury bond yields and acts as a headwind for the greenback. Apart from these expectations, the Bank of England BOE will be far more aggressive in policy tightening to contain stubbornly high inflation, might further contribute to limiting the downside for the GBP USD pair. This in turn suggests that any subsequent decline might still be seen as a buying opportunity and of course remain limited in the absence of any relevant market moving economic releases from the US. The USD, of course, price dynamics will continue to play a key role in influencing the major. Now, on a technical level, we have our key technical levels to watch. We have today's last price at 1.241. We have today's daily change at minus 0.0032. And of course, today's daily change percent at minus 0.26%. And of course, today's daily open at 1.2442. Now, a daily SMA 20, SMA 50, we have it respectively at 1.2454, 1.2456, and daily SMA 100 at 1.2303, and daily SMA 200 at 1.1998. Now, if we're to make an entry on this trade and let it run to at least the most recent support zone at 1.236659, we are looking at about 35 pips. An extension to 1.23182 would leave it at about 88 pips from that entry point, of course, which we can call good money. And that's our technical analysis on today's currency pair GBP USD. Now, let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at HP, Hewlett-Packard. And of course, it's recently a new headline is saying that it's not a growth stock. It's not exciting to own, but it's a winner if you are an income investor. Now, the business of HP is down, and the outlook isn't as all easy that rosy. For the business is quite solid and robust. That the dividend is as reliable as it comes. Now, the dividend is what, about 3.35%, which shares trading near the $30, which is a decent return compared to the S&P 500, and it offers a deep value compared to the broad market. Now, trading at 9 times its earning is half as cheap as the average S&P 500 name, paying more than double the yield at favorable guidance compared to some that have been less than ideal. And the odds are high this stock could outperform in the back half of the year. HP has mixed quarters. Reaffirms guidance. HP has a mixed quarter and is feeling the pain of diminished consumer and business demand. But the report also has good news. The revenue is about $12.91, is down about 21.7% compared to last year, and more than expected, but is an offset by margin strain on the segment. Now, what to expect from this on the technical level? We have seen a continuation of last week's trend for sale, and is gradually heading to a most recent support zone at 28.72. Now, if we're to make an entry at this point, and hopefully a breakout of this point leading to a new zone at 28.52, we are looking at about 65 pips from that entry point, of course, which we can call good money. And alternatively, we are seeing, we feel that maybe A possible bounce back to the upside following a halt in this support zone will mean a reversal to the upside at 30.45, which is at about 15 to 30 pips from that entry point, of course. Also good money. And that's our technical analysis on today's stock market, Hewlett-Packard. I remain your host, Nick. Bye for now.